Good morning, everyone, and welcome back to your Daily Five. I'm Leslie Jouflas of Trading Live Online, and thank you, StockCharts, for inviting me back for another segment. This segment's always fun to do. We've got 10 minutes to present usually five charts. And today I'm going to actually go back and do a little bit of a tutorial from the April 6th Daily Five I did, which was titled A Warning Sign of the QQQs. I noticed on some of the comments that there uh, might have been a little bit of misunderstanding of what I meant by the warning sign. So we're going to follow up with that today, and I'm going to show you exactly what that does mean. And then there was also a request to take a look at Bitcoin. So I'm going to take a look at Bitcoin using the symbol GBTC, and we'll talk about that as well. So this is the chart that I showed from April 6th Daily 5, where I talked about the warning signs. And this really has to do with the symmetry of the pattern. Now, I use pattern recognition, which are specific patterns, and they have specific structures to them. And these patterns repeat on a regular basis in the markets on all time frames, and these are what I use for trading setups. And one of those patterns is called the AB equals CD pattern. And this is where there's a swing up or down, then a retracement swing, then another swing of similar length and slope and angle as the first. Now, if you look over here on the right, I drew in an illustration labeled ABCD. And this is a symmetrical example of this pattern. And below it, I drew in an example of an asymmetrical. So you can see the difference in the A to B slope and angle, our retracement. And then the CD leg is very different from the AB. This is asymmetry. And when the CD leg is asymmetrical, this can be caused by gaps in the CD leg, long, wide-ranging bars. And when this occurs, the market is usually going to do one of two things. It either is going to be in a trending mode in the direction of those gaps and long, wide-ranging bars, or it may need a little more time to fill out that pattern and possibly move to some of the extensions where the CD leg is then a bit longer than that first AB leg. And then you want to start monitoring for signs of the pattern completing, which you can use things like, candle signals, possibly a gap in the other direction, trend lines, etc. So on this example that I showed from April 6, I marked in yellow circles the gaps that were forming in that CD leg. This red arrow, that's where we were back on April 6. And so I had noted at the time that the pattern itself had warning signs, meaning this is a sell pattern, but the warning signs were showing us that there was potentially more upside to come because of these, strong closing bars, the up gaps in that leg. And sure enough, the price extended, so far it's extended up on the CD leg to what we call the 1.27. If we do get another move to the upside without any sort of kind of repositioning of this pattern, then we may be completing the butterfly sell. But so far, we're still on a Gartley sell pattern with this. And I took a look today, and it looks like we're getting some sort of movement to the downside. Now, I want to also show you this chart of AMD, which I have covered several times on your Daily Five over the last year. And I think February 25th of this year, where this yellow circle is the last time I covered it. And it was a similar situation with an asymmetrical pattern. So I thought this might be a good example to show again. So here, we're looking at an A to B leg down, and notice the number of bars that were in the A to B leg. Now, where this yellow circle was, we had, not nearly as many bars. And so at the time, I said that the pattern was asymmetrical and it may extend down closer to the 127 could even break that and showed some levels below to watch. And I showed a simple trick for using the time symmetry to help in sort of watching for those turning points. Now, I just posted on my YouTube channel. You can find it here. This is the name of the tutorial if you want to learn more about that. But it did come down and it became symmetrical, and then it started the move back up. So I think that's a good example of how this does repeat, and it becomes, this is a tool. I noticed someone had made a comment that it was paralysis of analysis, but I don't suffer from that. But what I do is I monitor the patterns. And so knowing the correct structures and knowing when something is symmetrical or asymmetrical can be a very strong tool in helping with entries and risk management. Okay, let's go on now and let's take a look at Bitcoin using the symbol GBTC. This is Grayscale Bitcoin Trust. This is the only stock offered on NASDAQ or US Stock Exchange that holds Bitcoin as primary asset. So this can be an alternative to trading the cryptocurrency, but you have to make sure that you do your due diligence and you understand the premiums involved with this. So, of course, everyone knows that Bitcoin has been highlighted and it really has been sort of all the rage just everywhere. It's on, the local nightly news, on the national news, it's on all the forums being talked about. And somebody, as I mentioned, had requested that I take a look at this. So we're going to look at a weekly chart, then a daily chart, and then a 120-minute chart. And we're going to look at this from a technical standpoint of where it is and what trading tactics you might be able to employ at this time based on that information. So we're looking at the weekly chart now, and we can see that there was a breakout in late 2020, right up around that $15 mark, and then trended up. Now, this is a classic pattern in technical analysis where you have the ranging and then you have the breakout into the trending. And then we have the gap up here. You can see that up to the high at that 58.22, and then a decline back down to that, test that gap area. This is classic in technical analysis. Then we see that there was a B, a C, a D, a Gartley cell pattern. That's a retest of a recent higher low, and then more decline. So now let's take a look at the daily chart. So we're going to just sort of scale down and take some different views here and do some analysis. So we get a little bit more of a view of what was happening when the market came up to those highs. Now, this is called an extension pattern. We have a swing here, market moved down to a low, and then extended up to a Fibonacci extension number. So the important thing to look for that's been happening with the price from a technical standpoint is it's been making sharp moves to the downside and then back up, sharp moves down, sharp moves up, sharp moves down. Well, this is also classic indication that a range is forming. And there'll be patterns, there'll be tradable patterns that form within these ranges. And here's a B, a C, a D, Gartley. That's the Gartley cell pattern that we just looked at. We can also see here down below that the RSI and the MACD were starting to also decline in momentum. We have some new momentum lows on the MACD right down here. The RSI might be changing ranges. We can look at that a little bit later, but I'm just going to be watching this on any reactions up. But because of this ranging type of motion here, then the trading tactic, there might be an ABCD cell form here, is that you're in a range currently, and I've marked out on the 120-minute chart, the lower end and the higher ends of that range. We can see where this gap area is on the 120-minute chart, that these lows at that gap close have been tested now a couple of times, and now the market is, doing kind of a corrective rally back to the upside. And again, it might form an A, B, C, D type sell pattern. But the tactics that you can use when you're in a range are, you want to be looking for patterns that kind of buy down towards the lows for a rally back up, and patterns that sell around the highs, come back down. I like to use a center range mapped in, because eventually the prices will come around and cluster, and we can already see that that's started to happen here. And this may turn out to be a point where the market gets a stronger move, either to the upside break, or downside break. If we get a downside break, then more than likely that's going to lead to a steeper decline. So you can apply, even though it's all the rage and everybody's wondering, this huge move up, we can really break it down to classic technical analysis. And then we can, from there, decide what type of trading tactics to use. Well, that's it for today. And thank you for joining me on your Daily 5. And here's how you can contact me. You can email me. Find me on LinkedIn as my Twitter. And then again, the YouTube channel, if you want to take a look at that tutorial that I just put up. Be happy to have you take a look. Well, I'll see you again on another Daily 5, and everybody have a great trading week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.